Well, in our second part, we are going to discuss about the supply side, how to balance work and leisure. That's a very important question from the supplier of the labor hours, because as a worker you have to decide that how many hours you want to work and how many hours you need to leisure yourself. So how to balance work and leisure, or work balance life. So there are only 24 hours. We all know that we have a very limited, that's no one can add or delete from these 24 hours a day. So your task, figure out how to best allocate this time. Opportunity cost is how what now this is a very simple equation. Like if you want to work one more hour, so what you forego, you have to forego your leisure, your sleep, or whatever you can do. There's an opportunity cost attached with it. Yeah, if you want to work one more hours, so every hour you spend working is one less hours you have available for other things beside paid work. So leisure for short. Leisure, relaxing, hanging out with friends, sleep, making meals, cleaning your house, etc. These are the things that you can do if you are not working. So, for example, now, how many workers do you work? How many hours of work you want to do? So, at 12.5 per hour, how many hours will you choose to work? Apply again the core principle. The core principle is the cost and the benefit. The marginal cost. Break how many questions into one question, which should I work one more hour? Do we really get to decide whether to work one more hour? What about jobs with a fixed paychecks or a fixed number of hours? So the marginal principle will still applies because there are different margins of adjustments. So margin of adjustment, you can choose to take some overtime shifts, get a second job, look for a different job with the different hours, work longer hours to increase the likelihood of a raise or promotion. So these are the things that you have to keep it in mind. And again, you are calculating the marginal cost and the marginal benefit. So marginal benefit, the working one more hour, the wage you earn, and the marginal cost is you are 1 hour of leisure you forego. So this is the way. So wage is equal to marginal benefit of leisure that you forego, must be equal to the wage what you are earning. Now the slope of an individual labor supply curve. So how the labor supply curve is downward sloping. When the wage rises, there are two different effects working in opposite direction. The interaction of these effects ultimately informs the slope of your labor supply curve. And every individual have a different labor supply curve. Now the first one is a substitution effect. When your wage goes up, the opportunity cost of an hour of leisure is gonna increase, and you forfeit more money when you take an hour of leisure. So higher wages are an incentive to substitute your leisure time with the work and away from leisure. So result, if you work longer hours, your wage rises, then you get an upward sloping supply curve, labor supply curve. But there's an income effect as well, like a substitution effect and income effect. Now what is an income effect is? A higher wage increase your income, leading you to choose more leisure and hence less work. So leisure is a normal good and people consume more a normal good when their income increases. So thus under the income effect, a higher wages leads to a few work hours. And result, if you work fewer hours, your wage rises when you get a downward sloping supply curve. So this is the way that it works. But again, as we mentioned, there are two forces working in an opposite direction. So it depends that in what circumstances the substitution effect is greater, and in what circumstances the income effect is greater. And leisure is a normal good. So we see that previously examined intensive margin, how many hours each worker supplies. Now examine extensive margins, how many people choose to join the workforce or not. Like in general, overall population is deciding. They're also doing a cost and benefit analysis. Join the workforce if the benefit exceeds the cost. Gain work experience to boost future earnings. So this is the way. Costs are not staying at home to raise kids, not taking a full course load at school, not enjoying long awaited retirement. So the opportunity costs associated with joining the labor workforce help explain why some group of people choose to opt out of the workforce entirely. What factors to think about when choosing an occupation? likely earnings and earnings trajectory, like what we professions we choose, and it's very common sense. Like if I ask you guys that what you're gonna do, so some of you gonna reply that we want to become an accountant, we want to become a lawyer, and you want to become a economist, or you want to become a marketing manager or a human resource manager. So all these based on your perception that how much you can earn in these professions. So that's a very common way of making decisions, that in which profession you go. Earnings and the earning trajectory is going to help us to make these decisions. Non-wage benefits, health insurance, annual leaves, housing assistance, these are also considered to be one of the reason for deciding that which occupation you want to go. Number of hours you will typically need to work, benefit of doing something you enjoy versus something you hate. Will your job allow you to develop skills that will continue to be valuable? So these are the things. Evaluate the risk. Do few people actually make it actors? Volatility of the occupation, paid only on a commission basis. So these are the things that can be a reason for selecting a particular profession, because we are talking from the supply side of the labor, and these one of the way that we see that many people are going towards a one profession, why they are going to that profession. So these are the reasons that can explain us that why some professions are in high demand from the students perspective, that they want to study those and want to go to that profession. So these are the reasons. Now labor supply curve, as we in the beginning we mentioned, it's upward sloping. The reason is there are three reasons that we can explain why it is upward sloping. The higher the wage of an occupation, the more people are willing to work in that occupation. So this is one of the reason we already discussed. High wages convince more people to join the workforce. This is the first reason. Rather than pursue a master's degree, you go straight to the workforce so you can start earning that high wages. The second reason, existing workers may put in more hours. People already working in that occupation may increase the number of hours they work in order to improve their earnings and all these things. The reason three can be, some people may switch occupations from one profession to another profession, and it can be many reasons for it, but they normally go towards the higher wages, like if there is a higher wages. If the wage of hairstylist increases, people may switch over from a job in retail to the hairstylist. The interdependence principle and shifting labor supply, like what we discussed in the demand side. So the interdependence principle says that many things are interconnected. So it's not just one thing to make a decision. Your decision to work or not, as well as how many hours to work, depends on factors beyond wages. Labor supply decisions are connected to other markets and to government policies as well. So what are the reasons that cause the shift of the labor supply curve? Changing wages in other occupations. So if in other occupations, if the wage rates are increasing, so people may shifting to that occupation or that profession as compared to the one where the wages are stagnant or wages are decreasing. Change the number of potential workers with the increase in population, especially in case of immigrations and these type of things that change the number of potential workers, and definitely shifting the labor supply curve towards the right. Changing the benefit of not working. If the benefits of non-working, like social welfare, or we can say unemployment benefits, are high, then definitely the supply will go down. And we observe this in Scandinavian countries where the unemployment benefits are very high. So people don't want to work there. In general, not all, but people. So the one thinking is there are other non-wage benefits, employment subsidies, and income taxes that are also cause. If the income tax increase too much, people don't want to work. Why should we work if the most of the things, most of our income is going to be subtracted from income tax as an income tax? So there's a lot of other reasons. So change in non-wage benefits, subsidies, and income tax change the total compensation a worker gets, and thus the labor supply curve cause a shift. So factors that increase the labor market or supply the shift: increase in non-wage benefits or employment subsidies, decrease in income taxes. So these cause a rightward shift of the labor supply curve. What factors gonna shift to the left? Decrease in non-wages benefits or unemployment or employment subsidies or increase in taxes, as I mentioned. So, in part one, we discuss overall labor market and focus on the demand side of the labor market. And in the part two, we focus on the supply side of the labor market. Now, in the part three, we just focus on combining these two factors and discuss three different scenarios, how it works. And that's what we discuss in our previous chapter of demand and supply, the equilibrium, how we can achieve if there is an event occur or there is any scenario, then how these market forces move and develops a new equilibrium. So stay tuned.